Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Tuesday, January 8th, 2019. I wanted to get a very quick video out, not a whole lot to update, so it'll be brief. Really follows up on yesterday's video. Here's that, this is the NQ 60-minute chart. There's that 65.54-ish resistance level I talked about yesterday. And so overnight, the futures did inch up, and they tagged that level, brief move above it this morning, but they faded the rally or that opening gap in the market, the QQQ gapped higher, and they faded it pretty aggressively. And you can see right now we're back below that level, so that's just a brief pop, basically a failure at resistance. And you can see the divergences are still very much intact. Now we do have everything pointing down. We have the PPO pointing down with that gap fade today, the RSI. So the divergence is confirmed, and I posted the this chart, the ES 60-minute chart. There it goes. Okay, right before I started the video, we weren't there yet. That's why I wanted to get this out. In the trading room this morning, I posted this is a level. I'd mentioned that on NQ, which we were just looking at, we did break that trend line, but NQ limped higher after breaking it, and there was not an impulsive move down. And I often say this, the reason I focus on always SPY and QQQ, even if I'm not trading SPY, Q is my preferred trading proxy, NQ or the Qs. I will always watch both. You have to wait for, if one breaks down, the other doesn't, that will often give you a false signal. So you want to see both break down. And as I'm doing this video, we just broke down here. There it is. There's your red candle. What I said in the trading room earlier today is you want to see that breakdown impulsive. So far, so good. This candle's still working. So the larger that red candle, the better. The better the sell signal, if you will, the less likely it will prove to be a whipsaw failed signal. So there it is. Indicators are pointing down. Divergence is there. And again, from yesterday, this was the small rising wedge within a larger pattern. So this is just what we're looking at near term. And again, this is all short-term stuff. I mentioned that before. Long-term investors, trend traders, 401k money, IRA money, that kind of stuff. I don't see any reason right now to think this is the end of the run for the rally that started off the 24th, the December 24th lows. So as far as my long-term accounts, I'm not changing anything there. I'm still long in those accounts, and this is just trading account stuff. So if you're an active trader and you want to game a pullback, here's your sell signal. We haven't closed this 60-minute candle yet, and it won't close before I'm finished with this video. So ideally, again, you want to see that 60-minute candle close down below the trend line, and the farther down below, the better it is. Targets still remain. You have this 25, 2250-ish level, which was our breakout the other day, the breakout and back test. That would obviously be the first target. There was a breakout and back test move up. Expect a reaction there, and I still think we come on into this trend line at least, and possibly a little below it like I covered yesterday. So all the targets were laid out yesterday. Finally, I want to just show you one other chart I posted this morning in the trading room. This is a pretty key level here, and I don't believe I covered this in the video yesterday. 160.35 or 160, roughly. And this is a QQQ 60-minute chart. So you can see a reaction back here. Although we undercut it there briefly, there were reactions around that level, another reaction, and another reaction there. So that's a level. When we popped up this morning, I tried to get this out, as you can see, right after the market opened, a few minutes after, and highlighting that has a good chance to cap this advance that we're on right now. And again, it would take us back to those targets I mentioned. There's some horizontal support, sort of the scenario I laid out. You can see a move down there, a little bounce, and then come on in and touch this potential uptrend line and get a reaction off there, I think, and that will help to validate this trend line with that third reaction. Let's look at where we are now. Again, that was posted this morning. And this is the updated chart right now. So far, you can see we had a reaction off that level. Red candle, nothing big. We haven't even faded the gap completely yet. We're still positive right now in QQQ, but so far the seller stepped in pretty aggressively at that resistance level. And again, the divergences, everything was priced into the charts already. So you have to kind of feel sorry for those that bought a gap up like this after such an extended run. It just, it's all, and it doesn't, look, anything can happen. The markets can reverse here, and they may be rewarded if they held through this. But it's about risk reward. We're pretty overbought on the near term charts. Divergences, everything else up against resistance. So I still favor additional pullback. And so far, again, a pretty nasty and impulsive fade of that gap. By the time I have this video out, and likely they'll have backfilled the gap. So you have the targets. Again, those are near-term stuff. For active traders, and longer term, we'll see what happens. But as of now, I'm not overly concerned with the. I do think we go higher after the pullback I'm looking for, which could be, and it could be substantial. It could be 3% or so, possibly less. But again, we'll take it as it comes. All right, I'm going to wrap it up here, and I'll do a follow-up video later today. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.